Kia ora, I'm Chelsea Daniels, and this is The Front Page, a daily podcast presented by the New Zealand Herald. We've all been caught out when using PayWave or contactless payment in stores, where we think we know how much we're paying, and then a surcharge adds a tiny bit more on that final price. Well, that is about to change. The government is planning to ban retailers from being able to add surcharges to most in-store card payments. It follows a decision by the Commerce Commission last week to reduce interchange fees paid by businesses for accepting credit card payments. So, what does all this mean for consumers and business owners? Are there more savings that could be made on these fees? Or are they a consequence of trying to attract more competition to the market? Today on The Front Page, Massey University Associate Professor from the School of Accountancy, Economics and Finance, Claire Matthews, is with us to break down what all of this means for you. So Claire, can you explain to me what these surcharges actually are on contactless payments?
The surcharge is a charge that the business has put to charge the consumer because of the payment method that they've chosen, be it a credit card or PayWave, is resulting in a charge to the business. And basically what the business is doing is passing that on to the consumer for the choice that they've made.
Right. Is that one of these classic examples where technology has outrun the law, so to speak?
Not really. So the businesses have been charged for different types of payment acceptances, basically forever. That might be a slight exaggeration. But if we think about credit cards, so credit cards have been around for a very long time, and businesses have always been charged for accepting credit cards as payment. Now, initially that wasn't too big an issue for them because it tended to be larger transactions and they weren't as common. And so the businesses would absorb that. As credit card transactions spread, that's when they started to surcharge for credit cards. Then when PayWave particularly has been added and debit card transactions that go through the credit card system have become more common, then those surcharges have become more common because the surcharges that were associated with credit cards have also been added onto those PayWaves and other methods of payment, and therefore they have started to surcharge for those as well.
Was there ever any regulation in place around how much these surcharges could be? Because it varies from place to place, doesn't it? Some businesses add the cost in themselves, while others give you the choice of using PayWave or not. Sometimes I see 2.5% on the little cash register written in pen. Sometimes I see 4%, 1%. So, I mean, is it just up to the store owner or the business owner?
Oh, absolutely. It's up to the store. That's why you will see some businesses say, we won't accept credit card, we won't accept PayWave. We just don't want to have to deal with those costs. And that's fine. That to be able to accept that, they have to have signed agreements for that. If they do accept them, then they might choose to absorb that cost depending on the volume of transactions that they receive in that way, and the volume of business that they're receiving. But the other reason that you will see differences in terms of what the actual surcharge is that all businesses don't pay the same charge for accepting these payments. So the charge to the business varies based on the type of business, based on the volume that's going through. So they then will have a different surcharge. And effectively, there hasn't been a lot of regulation around this. It's become more of a problem in more recent times. So it's kind of been building up to this situation. And now there's a feeling that there needs to be something done. Whether what the government is doing is the right approach, that's a totally different question.
Well, you've led me on to my next question actually perfectly. And it was, do you think banning surcharges is the right move?
And fundamentally, I don't think banning surcharges is the right move because it doesn't eliminate the problem, because what will happen is the business is still going to incur that cost. So if they haven't been able to absorb it up till now, then I don't see that they're going to be able to absorb it. So what they will actually have to do is they will build it into their cost structure and therefore into their prices. And so rather than individual consumers paying, we will all end up paying higher prices. So it's not like it gets rid of the cost to the business, it just changes who pays for it.
And do you think that it could end up more businesses not accepting PayWave as well?
It's possible, but I think it's unlikely because the reality is so many consumers use that. The risk is that if they say businesses choose not to accept certain payment methods, then the risk for them is that consumers will simply choose to go somewhere else where they can use their payment method of choice. So it's more likely that they will just build it into their prices. If they didn't want to pay that cost and they didn't want to have to surcharge, then they would already likely have not been doing that.
Are there any other fees that the government could crack down on as well if it wanted to?
Oh, I'm sure there's lots of other fees that the government could crack down on. The better approach would be to make sure, with regard to these charges, would be to make sure that the businesses are only passing on the actual cost to them. And I believe that the Commerce Commission was doing some work in this regard to make sure that if, for example, and this is just a number plucked out of thin air, if, for example, the business was being charged 50 cents, then that's the charge that they were passing on to the consumer. They weren't taking the opportunity to say, oh, well, I've got to surcharge you, so I'm going to surcharge you $1 and I'm going to make an extra 50 cents. That's not reasonable, and cracking down on that. And the government could also be looking at the costs that the credit card companies and the banks are charging businesses to make sure that those are reasonable and that the costs that they're passing on, again, reflect the costs to them for those transactions. So those are some of the things that the government could be looking at. But things, if they want to really looking at it, things like what about credit card fees? In terms of just holding the fee for having a card and for having a joint account, for example, if you've got a joint account. So those fees. So there's all sorts of fees that banks and businesses charge, and why pick on surcharges? Simply because they're a little bit more visible and they create a bit of angst for some customers.
Well, it's a good headline, isn't it?
Absolutely.
And a new measure announced today will ensure that Kiwis, the price Kiwis see on the price tag is the same one that they pay at the checkout. Commerce and Consumer Affairs Minister Scott Simpson has announced that the government will ban in-store credit and debit card surcharges like PayWave fees. You will no longer be penalised for your choice of payment method, whether that's tapping, swiping, or using your phone's digital wallet. Measures like these are important, but the most important thing we can do to make you better off is to double down on our long-term economic plan.
Another thing that I've always found interesting is account fees you've mentioned, but also overdraft fees. Now, generally, I don't know about you, or I don't know about a lot of people, but I guess generally overdrafts happen when you've forgotten that your Netflix is going to come out of a certain account at a certain time of month, or they happen because you simply do not have any money and you're at the end of your tether and you need bread or milk or something, right? Overdraft. But why charge overdraft fees, A, for people who don't have any money to pay the fees in the first place, and B, if it's just you're forgotten about?
Well, the thing is, when you've taken out an overdraft, or when you effectively help yourself to an overdraft, potentially, if it's just that your payments are going through and being approved, the bank is lending to you. And so they do have fees. So if you were to go in and apply for an overdraft, they would charge you for that. But the other thing with an overdraft facility is that they always have an actual interest rate, but then if you actually have an overdraft facility, they have the interest rate that you pay on what you actually use, but they have an ongoing fee as well to reflect the fact that if the bank has given you $1,000 overdraft, that they have to always be willing and able to give you that $1,000 even though you don't use it. So they pay a little, or get you to pay a little bit to reflect the fact that they're putting that money on hold for you effectively, but you may not be using it. And if you're not using it, they can't charge you interest. And so if you help yourself to an overdraft effectively because you've gone overdrawn because payments have gone through or whatever, then what they're doing is simply applying the same overdraft charges that they would if you'd actually applied for one.
Okay, so you've got me back on board with the overdraft fees. What about account fees? So I want a certain account, I want to set up another account, and they're like, great, you can do this, but it's an extra $10 a month, $10 a year even. Should they be able to do that?
Well, to be honest, I didn't know there were that many account fees around these days. I thought the banks had generally got rid of those because they had reached the point where they didn't think they were terribly useful. If they are still charging them, there is a question as to whether they should be. I mean, there is a cost to the bank of just having an account in operation, irrespective of how often you're using it. But I would suggest that these days it's marginal and it would be more difficult to continue to justify that. But with some of those accounts, it depends. That they are providing you with a service and there may not be any other income associated with that. So if they're not charging you transaction fees, for example, then the only fee they've got coming in is that account fee. And so that's a small cost to pay for having the ability to make those transactions and to have that account that you can use.
I saw the Commerce Commission last week announce that it was reducing interchange fees businesses pay to the likes of Visa and your MasterCard, etc. Firstly, what are interchange fees?
Well, interchange fees actually are the basis of the surcharges. The interchange fees are the fees that the various parties in the transaction for credit cards and PayWave transactions, etc., are charging each other, and that eventually get passed on to the businesses. So interchange is just the fee that goes from MasterCard or Visa to the bank and then gets passed on to the business.
Right, so everybody kind of gets a little piece as it goes back and forth. If I was to try and visualize it, your money's hopping about, and then it costs something each little hop. Right. Yeah. So the Commerce Commission has announced that $90 million in savings that it'll save, but it costs $1 billion a year to accept Visa and MasterCard payments. That seems like a lot, or is it just a fact of the matter is that we're using our cards lots and we don't use cash anymore?
Oh, it certainly reflects the volume of transactions that are going through on cards. There's if the fees that are being paid are that high, then that says that there's a huge amount of money that is being spent on cards. And yes, absolutely, we're not spending on cash, using cash anywhere near as much as we did. And increasingly, the EFTPOS cards that we use are more likely to be PayWave cards. So even if we're taking the money out of our accounts rather than through a credit card account, it's going through the PayWave system rather than the direct EFTPOS system, and therefore that's catching those interchange fees. So it is the ongoing expense. And as well as the volume that's going through on cards, we're just spending more money generally. So, yeah, that's where that's coming from.
Can you talk me through this idea of open banking? It's something we've kind of heard about, but if you aren't paying attention to it, I guess the specifics of it, you've probably kind of passed it by, hey?
Yeah, so open banking, I'm actually going to quote a definition that comes from Payments New Zealand, who are the body operated by the banks that looks after the payments, because I think it's quite useful that they've got quite what I consider quite a good definition. So they say that the term has evolved to describe a series of initiatives which gives consumers greater access to and control over their banking data. So that's really what open banking is about. It's about having access to and control of the data around your banking, your accounts, your transactions, etc. So it can provide consumers with new, innovative and convenient ways to make use of their banking data through third-party products and services. So it's about how can you access that information, how can you use that information for your benefit. So you have a fintech company that may set up a system through the open banking arrangements whereby you can, if you've got accounts at multiple banks, you can actually collect that into one site. Some of the fintechs that are using open banking are doing it for new and different payment methods. So there's a whole lot of fintech companies that are out there making use of the new open banking standards to provide different services to consumers.
Right. So would one example be I download a budget app on my phone, and then through that application, I'm able to say, yes, you can have access to my Westpac, ANZ and Kiwi Bank accounts, say, and it'll all collate onto one app.
Yeah, so that's certainly an example of open banking. And so the company that's providing that budgeting app is able to use the open banking standards to be able to draw your information from the banks without you having to disclose your PIN details or your password details, they can access it in different ways, because obviously you're not supposed to provide your password to somebody else. And so they can just draw that information through what they call APIs. And don't ask me what an API stands for now, because I can't remember. But it's a computer term, and it refers to the connection between the app and the bank that allows them to draw that information into the app so that you can then access it and use it in different ways.
Oh, right, because that was going to be my next question is I'm not sure about giving this random app on the Apple Store my bank account password. But that's good that it circumvents that kind of.
Absolutely. You've still got to give them the authority to access your account information in some way, but you don't actually have to give them your password.
So our concern has been, well, now that reduction's happened, how do we make sure that gets passed through to you when you're at the shop? Yeah. What's to stop the retailer just charging you the same fee even though their costs have dropped? And so we think the simplest, fairest, most transparent thing to do is to say, no more PayWave charges, treat it like you do any other cost in your business, whether it's rates, rents, fuel, insurance, and just include it in the price tag that people get on the shelf. That way everyone knows what they're up for and doesn't get stung at the checkout.
Is there an argument to be made that the government and the Commerce Commission, if they wanted to, could reduce all fees until they're basically zero? But if they did that, I suppose, would that then mean these companies can't make a profit, and then that would mean they just wouldn't offer their services here?
Yeah, so in terms of the open banking products, they have to be able to make money somehow. And the reality is, as consumers, that in general, we're not too happy about paying for that type of service. We're not happy to pay for financial advice. We're not happy to pay for mortgage advisors to help us get home loans. We're just not generally happy to pay for things around accessing and managing our money beyond the basic account fees. The companies that are providing open banking products do need some way. And so that may be via some of the fees that they will charge in this way. And if the Commerce Commission or any other government entity was to simply regulate away fees, which is absolutely a possibility, then it will make it harder for organisations to provide the services, because if they're not going to be able to charge the consumer, then where are they going to get the money from to be able to continue to operate?
So how do these fintech groups work? I know that I gave my little budget app example, but I suppose there's something like Polly as well, and I've only encountered that name while I'm like late night online shopping and I'm putting my Visa card details in and there's an option that says Polly. Is that another one of these open banking kind of situations?
Actually, Polly isn't. Okay. Polly's been around a lot longer and predates the open banking arrangements. I'm not sure whether they will seek to rearrange how they operate to come within the open banking sphere of operation. But actually, and because I have personally used Polly a lot, I trust it, I don't have a problem with it. But technically, in terms of using Polly, I am going against bank regulation because I'm actually putting in my password. So Polly does have access to my password that they're passing on to the bank to take the money out of my account. I have to admit, I've used it a lot for various things with reputable companies, but because I trust Polly as well. But it's not an open banking app at this stage in terms of the way it operates.
Claire, do consumers ultimately win or lose when it comes to reducing any kind of fees when it comes to our money?
Well, it does depend on the type of fees, and the banks have actually done quite a bit of work. If you looked at what the fees were 10, 15 years ago that they were charging, they're charging a lot fewer fees than they were. They've done a lot of work to try and make that simpler for people and to reduce the costs. So it does depend on the type of fee. If you're simply eliminating a fee at that level, then consumers are going to be better off. But if you're doing things like taking the surcharges out, then that's not necessarily making consumers better or worse off. They might be a little bit better off on one front, but they're going to be worse off on another front because it just changes the way that the payments are made. And arguably, if you remove the surcharges, for example, it may make it better in that some people, some firms may decide, well, they need to therefore compete and therefore may start taking PayWave but at the same time, that may then mean that their costs go up. So it's really hard to see with some charges. Getting rid of the fees is not necessarily going to improve things.
Should we just all go back to using cash?
Well, theoretically we can, but increasingly it's going to be difficult to get cash. There's not the number of ATMs around, certainly not bank ATMs. And if you go to the non-bank ATMs, there's fees associated with those, quite large fees actually. So you don't necessarily want to do that. And if you've got cash, then what do you do with that?
Bury it in the backyard, Claire.
There are some budgeting benefits to using cash, but yeah, putting it under your mattress, and then there's all those security risks. And the reality is businesses don't actually want you to deal with cash, because if they're collecting cash, then they've got to do something with it. And that becomes a hassle, particularly in smaller communities, because they don't have the access to bank services to be able to offload that cash easily.
Thanks for joining us, Claire.
My pleasure.
That's it for this episode of The Front Page. You can read more about today's stories and extensive news coverage at nzherald.co.nz. The Front Page is produced by Ethan Sills and Richard Martin, who is also our editor. I'm Chelsea Daniels. Subscribe to The Front Page on iHeartRadio or wherever you get your podcasts, and tune in tomorrow for another look behind the headlines.